Trading Course 101. And remember, we are trying to build the 3 pillars, right? We are trying to build your strategy and or your system. We are trying to understand how risk management works, and the big one, we are trying to understand how psychology works in all of this stuff, right? And everybody, we are in the intermediate module, so if this is your first time with us, we are passed over the basic and the beginner module. And if these lessons are too complicated for you, maybe if you don't quite understand what is happening, please go back to the Ducascopy YouTube webinar page and start to watch Forex Trading Course 101, starting from lesson 1. Hello, Time to Shine. Hello, Miguel. Also remember, 90% of traders lose money in the Forex market worldwide. And the webinars are not investment or trading advice. The webinars are for educational purposes only. And for homeworks or questions, you have my Gmail contact down here, or my Skype contact on, and my LinkedIn contact. So today, what is your strategy part 3, everybody? Remember, I have a 20 seconds delay on the chat. So let's dive into the market, and today we are going to talk about, everybody, about trade management. Okay, so for the previous 2 days we talked about entries, right? And some of you, we are going to work today with this. Somebody sent me this on email. I asked for permission, can I show this? He said yes, no problem. Okay, so this is a pre-trade checklist from some of you. Okay, you have confirmation, time frame daily, trading time frame nothing, but you have original Fibonacci levels, you have sub Fibonacci levels. Let me make it bigger, right? So let me see if I can make it bigger. Whoops, too much. 14. Let me arrange this one, everybody, so you are going to see. Okay, and where is this one? Maybe like this. Okay, well, I'm going to delete the Fibonacci levels just for this exercise. And you have the confirmation time frame and the trading time frame. Let's make it bigger. 14. Okay, 2 different. Okay, so we're going to use this, everybody. Hello, Annie, how are you? And we are going to talk about trade management, right? So one part of your strategy are the entries. Now we are going to move to trade management rules, right? And remember, when you are going to define the rules must be non-negotiable, and the rules must not be subject to interpretation. Okay, now let's talk about theory first. Let's say that we have an up Fibonacci. Okay, let's say that our strategy is, well, we are going to work with the Fibonaccis, and let's say that, oh come on, not this one, so let's do it again. This is the market, and there you go. Okay, and we said that we are going to enter with the counter trendline break, and we said that we are going to enter with the candlestick formation, which is here, bullish candlestick formation at some past level, right, of support, something like this, right? And we entered. So this is structure, the short-term trends and structure and everything is in place, right? And the what else? So okay, one more. We have the uptrend line in here, something like this. And okay, this is our Fibonacci right now. So this is the picture right now, everybody. Now, strategy, you need to define your rules, everybody. When you enter, how are you going to manage your trade? How, and there is a trick to this, everybody. How are you going to manage your trade if, let me color code this in green. How are you going to manage your trade if the trade goes your way? Okay, and how are you going to manage your trade if your trade goes against you? What are you going to do? And the challenging part, everybody, is there is no right or wrong. Each and every strategy is a little bit different. So this is A, right? So this is up in here is going to be the B, up in here A, B, right? A, B, C. Okay, so this is the question. How are you going to manage your trade? Because we have rules and concepts, right? Rule number 1 for the beginner trader: don't let a winner turn into a loser. This would be this is a concept that you need to adjust your trade management. You need to have rules. How are you going to manage your trade? And this is one of the reasons, another reason why 90% of traders fail. Most of beginner traders or semi-professionals, they think, oh, I'm going to get in and I'm going to sleep, you know, or I'm going on vacation, or oh, I'm going to set it and I'm going to forget it, you know. So the Forex market doesn't work like this. It's 24 hours a day. So maybe your winner, if you don't follow your... I'm not saying to you that you need to stare at the charts 24 hours a day. On the contrary, but you need to manage your trade, everybody. At least you need to follow the swings. So if you are on the 1 hour chart, you are going to have more swings. If you are on a daily chart, you are going to have less swings in the same time, right? So the smaller the time frame, the more hard work you are going to have. Okay, let's write this down. The smaller the time frame, the heavier the trade management, everybody. And I'm talking about time, okay? On the smaller time frame, you're going to have more swings, more stuff happening, more false breakouts and support resistance levels broken, and maybe market reversing. Okay, the smaller the time frame, the more hard work about trade management. So this is theory, everybody. Now we are going to open what? Let's open AUDCHF, right? AUDCHF. Let's open AUDCHF on the 4 hour chart. Okay, AUDCHF 4 hour chart, and let's see, we are here, and this is the first Fibonacci. Let's color code it like this: Fibonacci original one, right? And of course we are here right now. We are here. This is the market. Let's put everything in place. This is our A. Up in here, this is our B. There you go. And let's undock the chart and let's do it like this. So this is our chart right here. AB, let's put also the C on the chart. ABC. right? Okay, and we are here right now. So trading time frame, counter trendline break, candlestick formation at support resistance level, end of retracement, stochastic, we don't have it, trend confirmation with relevant highs and lows, structure confirmation with relevant highs and lows, EMA cross, we don't have it, structure extension. Okay, so this is the chart, right? And we have a counter trendline break. One more, okay, if you want. We have a counter trendline break, and we have a bullish candlestick formation, everybody, and this is the C, and we are in. We entered the market, okay. Stop loss is here. It's, and remember, there is no right or wrong. This is our stop loss and our projected, right? Our projection, where is the D? The D projection is up in here. So before we enter the trade, we decided about our stop loss. The market closed here, so this is our stop loss, and there you go. This is our take profit, right? Nothing special, nothing too difficult, nothing, you know. Question: any Miguel time to shine, Akos and everybody else who is in the webinar, how are you going to manage your trade? What do you think? If the market is going to go up, are you just going to leave everything as it is, or are you going to change something? Or, and especially if the market goes against you, what are your trade management rules? So trade, and there is no right or wrong, everybody. Trade management rules. Okay. Hello MHB, it is not double top. Akos, let's stay focused on the lesson, okay? How are you going to manage your trade, everybody? Akos, you can say, if I see double top, I'm out. This is a trade management rule, you know. But I want you to, everybody, I'm not going to give you straight answers. I want you to think. I have somebody screaming on the other platform, oh, Passion, give us the answer. No, I want you to think. Okay? Sorry, I missed it. We are in the trade already. Yes, Miguel, we are in the trade. And we are talking about what trade management rules are you going to have. How are you going to manage your trade if the market goes up? And how are you going to manage your trade if the market goes down? And there is no right or wrong. And this is the challenge. When you are a beginner trader, everybody, you are going to hear 5 different traders with different strategies and different trade management rules. And you are going to be confused, right? Man, what should I do? Should I leave it like this? Should I take my profits? Should I, right? I don't like this trade initially. Let's focus, time to shine, on the lesson. Okay? What trade management rules? Okay? We are not, everybody, just to be clear, we are not talking about entries anymore. Okay? Today's lesson is trade management rules. Great, great. So number one, thank you, Akos. Great. Number one, put a trailing stop of how many pips? 20, 40, 50, 70, 100. I think the stop loss is too tight. Miguel, how are you going to manage your trade? Independently of the stop loss is too high, stop loss is too near, okay? Each and every one of you have different rules for entries. This is just an example. And Akko says trailing stop. Okay, let's say 70 pips. In the meantime, I'm going to put it later, a different Stoyan. When it goes up, move stop loss above below the most recent high low, or below above EMA, or above below trend line. Great. So number 2, cancel and replace the stop. This is Stoyan. 100 pips plus. Okay, no problem. 100 pips. Great. Okay, at least 20. So 20 to 100 pips. Cancel and replace the stop. Okay. What else, everybody? What else? So if the market goes up, I'm going to have a trailing stop, or Stoyan says I'm going to cancel and replace the stop. And this is the 4-hour chart, right? What if the market goes down? Miguel says type stop, right? Okay, so Miguel, we are going to, so for the time being, those are the trade management rules, everybody. And me and Miguel, we are going to put the stop loss down here, okay? Remember, everybody, we are not talking about entries anymore. I know that this is not the perfect entry. Risk reward is not worth it, but we are talking about the trade management rules. So when you put together a strategy or a system, a mechanical system, where your entries are going to be based on some indicators, you must have a trade management rules. Okay, because your system, everybody, or your strategy should not behave the same or have the same rules if the trade goes against you or the trade goes in your favor. Miguel says, let's see if the trades continues bullish. Stop loss at counter trend line break. Okay, so we have different stop loss level. Okay. Everybody, you need to, this is a rule, okay? You are not going anywhere without this. Traders rule. Traders rule. You must, it's a must, you must have all the rules before you before you enter into a trade, everybody. Okay, this is trader's rule. You must have all the rules before you enter into a trade. So we have 2 rules if the market goes up, but we have 0 rules if the market goes down, right? So if this is our example up in here, right, and we entered in here, counter trendline break, you know, but instead of the market going up, the market is going to wave down, right? Why don't you have any rules here? And remember, there is no right or wrong. I'm just asking you, you know. Everybody, listen to me very carefully. I have some students here. Okay, I have some students here, and we are talking about creating a strategy. Okay, and the student says, right, oh, I'm going to enter with the counter trendline break at some past level of past support, and the Fibonacci's, and the Stohastic, and the MACD, and blah blah blah. you know, and the next week the student comes back to class and I'm looking at his trade, and this is his trade here, okay, and let's suppose, everybody, that this is you, and my question is, John or Paul or Maria, why are you letting the market slowly hitting your stop? And especially if this is the daily chart, I mean, it's just an example, okay? It's just an example. Why you entered here is just an example. Why aren't you doing anything for 3 weeks? Why are you just watching the market slowly waving down and going against you? And the student goes, well, I don't know. So everybody, it's easy to put a trailing stop and cancel or replace. What is your strategy? How are you going to manage your trade when the market, after you have entered, the market goes against you, against your trade? If it goes down, we have the option of placing a reverse stop order, but it will also depend on where the market is. I will wait for another counter trendline break. So Stoyan, are you saying that if the market goes against you, would you enter again? Right? Is this what you are saying, Stoyan? So you would wait, you entered up in here, first circle, you entered up in here, the market went against you, and you re-entered at the second counter trendline break, Stoyan? Everybody, remember, there is no right or wrong, okay? Until the market doesn't hit the A, how the saying goes, until the market doesn't hit the A, it should go your way, or something like that. So you have, everybody, you have different traders doing different things. So you have traders who are going to leave the trade opened, okay, and enter at the next counter trendline break. This is a strategy. If the market goes against me, stop loss above or below the A, and when the next counter trendline break happens, I'm going to enter with another entry. So you have two trades, and stop loss goes below or above the A. This is a trade management strategy, everybody. This is how a trader is going to manage his trade. And some of you are already screaming, man, what if the market stops you out? Well, it doesn't matter. But this is a strategy. And some of you are saying, oh, but this is risky. Well, there is no right or wrong. I know some traders that are trading like this. In the situation you are showing, I will wait for the price to break the previous lower high. Okay, great. But you won't cancel your first trade, won't you? You would not cancel your first order, would you? So, to give you a hand, everybody, to help you a little bit, you can put in here number 3, right? Number 3. And there is no right or wrong. Number 3, example. I will exit the trade if I see 2 lower highs and 2 lower lows on the 30-minute chart. Or 3, again, other example. if the market goes against me, I will open another trade with half risk of my previous trade. If the market goes against me, then okay. Now another example. If the market goes against me, I will open another trade with double risk. Okay, so you have different things in here. And everybody, the key point is this: you must have something before you enter into a trade. Just put something in there, anything, okay? And when you are trading, try to journal. Try to journal your trade and try to figure out how your trade management rules are helping you to make consistent pips and money, or how the trade management rules are breaking you, making you frustrated, So this is revenge trading. No, it's not. Akos, guess why this is not revenge trading? There is a logic attached to every of this rule. Now the challenging part for the beginner traders and the semi-professional traders is there is no right or wrong. You are going to have 3 different traders. All of them are going to put a trailing stop of 100 pips if it goes their way. All of them are going to cancel and replace the stop if the market goes their way. But if the market goes against them, the 3 traders are going to manage their trade totally different. Martingale, Akos, I have no idea what martingale is. Okay. So trader number 1, he is going to exit the trade if he says 2 lower lows and 2 lower highs on the 30-minute chart. Trader number 2, he's going to open another trade with half risk. So if he's risking 1% in the first trade, he's going to risk 0.5%. Or the third trader, he's going to open another trade with the same rules: counter trendline break, bullish candlestick formation, past support, and the other things, but with double risk, meaning he's going to not enter with 1%, but he's going to enter with 2%. Stoyan says, I was thinking that we have the stop on the right part of the chart, but when I have the stop below the A, like on the left part, I'm trying to hedge the position, which is not working now. Stoyan and everybody else, hedging is an advanced technique. Not many traders all around the world understand hedging. It's a great tool if you know what you are doing, but it's extremely dangerous if you don't know what you are doing. I have students, traders, who burn their account with hedging. Everybody, you are going to burn your account twice faster if you don't know how to use, if you are not emotionally stable, Akko says, martingale, I don't know what this is. I heard about, but I never learned. Miguel says, doubling the risk if the market goes against you, so-called martingale, is it considered dangerous? It's not. And the hedge is until the price shows me a change in the highs and lows. Okay, let's talk about, everybody. Remember, there is no right or wrong, but let's talk about the logic behind the double risk? It's simply risk and reward. You know, a trader is going to open 1% risking that much, and if the market falls down here, you know, and breaks the counter trend line in here, he's going to have less risk and a higher reward, you know. And if he's trading the Fibonacci's, you know, so this is the logic below. Okay, this is the logic behind the doubling the risk. Okay, so instead of risking 1% down in here, a trader can or could, and there is no right or wrong. We are not going to fight, oh, this is, you know, there is no right or wrong. But the logic why 1% up in here and the logic why 2% down in here is because of the risk reward, you know. The lower the market goes to the A, the higher the chance of the reversal. This is the logic behind the Fibonacci trading, everybody. This is true, but I am just testing. I believe if you have $1 million, then do hedging. No, money is not going to help you, MHB. Money is not going to help you. You can burn the $1 million twice faster if you don't know. Hedging is extremely dangerous if you don't learn the basics, everybody. Okay, don't play around with hedging, especially with the real money. And he says, still the market did not hit the A, I stay in the trade. I make a new analysis, and when I did not make mistake, I place sell for the same amount. When I reached, for instance, 70 pips, lost and closed the trade when the market reversed the stop loss for some time. Great! Thank you, Annie, for sharing your trade management rules. So Annie has a stop of 70 pips, which is okay. And also a likely confirmed C, so adds to the probability to the trade. A confirmed C, time to shine, is an entry. We are talking about trade management, okay? Everybody, I'm going to explain to you again. It doesn't matter where you enter, you must have trade management rules, okay? It doesn't matter if you enter high or low or 618 retracement, 21.4 retracement, you know. You must have trade management rules. Repeat for the second time. If the market goes down and the stop loss is not hit, continue with the trade. Thank you, Miguel. So as you can see, everybody, there is no right or wrong. Now let's continue with the exercise. Who in the webinar would be trader number 1? He's going to exit if the trade has 2 lower lows and lower highs on the 30-minute chart. Who between you is going to choose the trade number 2? He's going to open another trade with half risk. And who in here is going to be trader number 3? He's going to open another trade with double risk. So let's make a poll, everybody. We are going to move on with the chart. We are going to perform this trading exercise. Okay, so we have trader number 1. Trader number 1, red. There you go. Trader number 1 is here. He's going to exit if he sees 2 lower lows, 2 lower highs on the 30-minute chart. Trader number 2, he's going to open another trade with half risk, and trader number 3 is going to open another trade with double risk. Time to shine, number 3. Congratulations. What about you, everybody? Annie, MHB, Stoyan, Akos, Miguel, Victor, if you are in here. What about you, everybody? Time to shine. Number 3, Miguel. There is no right or wrong, everybody, but you are going to see, I hope, with this trading exercise, how different trade management rules are going to give you different results. Okay? Now, time is passing quickly, so I'm going to move with the chart. Any number 1, ACOS number 1. So, I need to open a 30-minute chart, right? 30-minute chart. And 66497. Okay, ACOS number 1 and number 1. Number 1, number 2. So where are we? Let me check. This is August 2019. August 2019. Let's wait for the software to respond, everybody. Okay, let's do it like this. Okay, so let's move on. Great, number 1, number 1, number 3. So let's see, let's move. So the next candle, where is okay, this is our entry, right? Somewhere in here. This is going to symbolize our entry. Let's make it green and like this and like this. Okay, great. Okay, let's see, let's move. The market's a little bit down, you know, sideways going down and sideways, right? Sideways, one candle, one more candle going down. I'm just going to move from the 4-hour chart and make a vertical line just to not to, and go to the 30-minute chart. 30-minute chart. Hopefully Forex is going to respond, right? So 30-minute chart, everybody. Okay, so we are here right now and this is the market. Okay, so Annie and ACOS, you two are out, right? This was our entry, and after our entry we have one high, one low, lower low, lower high, lower low, lower high. Okay? Remember, there is no right or wrong, everybody. Can you see how different is going to be this trade for everybody? Can you see? Remember, there is no right or wrong. So ACOS and Annie, you are out. Okay. You didn't lost 1%. You lost what? You lost 0.5%. Okay. Let's say you lost 0.5%, but you are out. Okay. Now I'm going to go back on the 4-hour chart and let's zoom in again. So we are here, right? This was the lower low, lower high. Okay, let's remove the lower lows, lower highs. ACOS and Annie are out. So we are here, the market is moving, falling down, right? Moving up. Okay. Now, Annie and ACOS, what are you going to do? Would you re-enter again, everybody? You have another counter trendline break here. And remember, when you form a strategy, everybody, you should obey your strategy. Okay? So let's see how it's going to play out. Trader number 1 is out. Trader number 2 and trader number 3 are still in the trade. Okay? Now, what if there is another opportunity to enter according to the rules of the entry pre-trade checklist? There is another opportunity. What if you are sleeping, everybody? Okay, the market moves 24 hours a day. Yes, and that's why I'm talking about. You should re-enter, or you want to re-enter, but you are sleeping. Or you are working at your job, you know, or you are having fun with your friends, it doesn't matter, you know. The trader number 2 and 3 could be sleeping, but they are still in the trade. The trader number 1 needs to be in front of the chart to re-enter. So let's move on. The market went up, 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 up. Okay, great. So the market is going our way. Some of you is going to put trailing stop, you know. Trailing stop is going to measure of 20 pips or 100 pips. Some of you has a trailing stop. There is no right or wrong, just different ways to manage the trade. And Stoyan will go with cancel and replace, right? So let's wait. The market is moving up, right? Okay. Cancel and replace didn't happen. Where is the high? Most recent high. Okay. So, and let me see. Okay. Trailing stop was hit, everybody. Okay, trailing stop was hit, and cancel and replace didn't happen yet, right? So as you can see, everybody, I hope you understand the lesson today. Different trade management rules, different strategies in the end are going to have a totally different outcome in a series of 100 trades. So as you can see, everybody, I hope you understand this, and this is one of the lessons that you should watch over and over and over again, minimum 3 times, to dive in the knowledge and try to understand what we are trying to explain you here. The market went against us. Different traders, some of them were out, some of them were in. For the traders who are still in the trade, now one is out, the other is still in the trade. Okay, so the trailing stop is out, cancel in or replace is still in the trade. Now let's see what is going to happen. The market is moving up. Now the trader with the cancel and replace can replace, I should wait for another, okay, can replace its stop, you know. And the trader with the trailing stop, if he was awake and in front of the chart, in theory, okay, because the risk reward is bad up here, in theory he could or she could re-enter the trade. But what if he or she is sleeping or at work or traveling, you know? And remember, there is no right or wrong. And the market went up, and the trader with the cancel and replace is here, bam, hit the extension. Okay, so in this trade, everybody, in this trade, all the strategies had different outcomes. So the traders who manage the trade with the I will exit the trade if I see 2 lower lows and 2 lower highs, on 30-minute chart they were out, right? They didn't lose much, but they didn't earn nothing, right? And if they were awake, they could re-enter. But still, the market is waving, so I don't know, right? Maybe what? Maybe I will exit the trade if I see 3 lower lows and 3 lower highs, right? There is no right or wrong, this is just an example. On the other hand, when the market went in our favor, the trader who managed the trade with the trailing stop and had a different result, still ended in money, but had a different result, right? In comparison with the trader who went with cancel and replace, right? And also remember, if you are going to manage your trade, everybody, with a trailing stop, remember the risk management rules. So you cannot trade, listen to this, everybody. If you are using the trailing stop and you are not going anywhere, it's because you are not re-entering the trades. You should re-enter with the trailing stop, because we had already a lesson on risk and reward, right? So if this is the risk, and it's just an example, and if this is the reward, right, and because of your trailing stop, everybody, you end out of the trade up in here, it's just an example, you must re-enter, because if you are not re-entering and you are leaving the trades like this, guess what you are doing? You are risking more than you are making. Okay, trailing stop for the beginner traders that don't have any specific knowledge. Trailing stop, it's not a good thing, everybody. It's dangerous. And I know some of you are screaming, man, but I need to go to work, you know, and I have other activities, and I have class, and I need to go out with my dog and my cat and my girlfriend and my boyfriend. How can I manage the trade without the trailing stop? Right? I mean, trailing stop is a nice tool. I can enter the trade, I can set it and forget it. No, you can't do this. Because the first time the market is going to go against you and you are not going to have the chance to use the trailing stop, you are going to lose what? Maybe you are going to have 5, 6, 7 winners using the trailing stop, but you need one loser. Is going to eat all your trailing stop profits. Everybody, how does cancel and replace work again quickly? Cancel and replace. Everybody, please understand, there is no right or wrong, okay? I'm not saying that trailing stop is bad. I'm just saying that if you need to monitor your trades, you need to manage it. And if you see that the market stopped you out before you earned 1.5, 2, 3 more, you need to re-enter. If not, you aren't going anywhere with your trading. True or true, everybody? Is this true or am I talking BS to you? Cancel and replace, time to shine. Every time the market makes a new high, you can cancel and replace the stop to the previous low. Okay? This is cancel and replace quickly. Every time the market makes a new high, you can cancel and replace the stop to the previous low. But it must be a low, so this is the new high and this is the previous low. This is the new high, this is the previous low. This is the new high, if you want, and this is the previous low. Okay? True, sir. The one that said it's true are the ones that are okay. I would like to hear somebody says, no, it's not true, you know. Is anybody in here? Passion, you are scaring me. No. Passion, you are angry. No, I'm not angry. Don't worry. No. No, sir. Never angry, you know. Okay, everybody. Questions? Homework. Until tomorrow or this week. Homework. Think / test, but put together rules for trade management. And send it if you want, right? And send it to my email so we can talk. You need to be a swing. No, Akos, I don't know what you are referring to, but everybody, you must have entry rules, trade management rules, and exit rules independently of what type of trader are you. You need to have all those rules. If you are a swing trader, if you are a day trader, if you are a news trader, if you are a scalper, you must have those rules. Position trader, you know, you must have those rules, everybody. You need to know we are playing chess with the market, right? So you need to know what is your trading plan. Plan your trade and trade your plan is how the saying goes. You need to know what are you going to do before it happens. If you don't have these rules, then you are just reacting emotionally, you know. And until you're emotional, you aren't going anywhere with your profits. I promise you that. You need to have a plan. And at this stage, it doesn't matter. Oh, Passion, but I have a bad plan. A bad plan is better than no plan. Believe me, a bad plan is better than no plan. Because at least you are training yourself to make good trading habits, and having a plan, everybody, is a habit. Check your pre-trade checklist before you enter a trade. It's a habit. Checking on your trade management rules before you close your trade. It's a habit. So, in conclusion for today, if you are trading from your mind, and not from paper or Excel or whatever, you are forming bad trading habits. And you can bet that you are emotional and you are just reacting to the market. And this kind of traders, and I've been one of them, we are entering too soon, we are exiting the trade too soon, we are entering at the wrong time, at the wrong place, we are all over the market, and we don't have a plan. We are just reacting on what is happening, and we are losing pips and money over and over, right? And we don't have winning months. True or true, everybody? Is this true or am I talking BS? With cancel and replace, it still seems like you would have to re-enter the trades. Yes, time to shine, it could be. You know, we don't know how about the swings and how the market goes up or down. You know, in conclusion, again, there is no right or wrong. Okay, everybody, please watch this webinar again 2 or 3 times if you want to learn. If you don't want to learn, no problem. But if you want to learn, watch this webinar in particular 2 or 3 times and build your strategy. Put together entry rules, put together stop loss rules, and starting from today, put together trade management rules. and work from the paper. Before you enter into a trade, check your pre-trade checklist. Before you close a trade, look at your pre-trade checklist. Before you re-enter into the market, look at your pre-trade checklist. In the meantime, the market is moving up or down. Take a look at your trade management rules. You can also have a trade management checklist if you want. Totally agreed, true sir, I think you're right. What do you do though? I don't know this. Okay everybody, Rakesh is coming next on stage. Please don't forget to like the webinars, and until tomorrow, stay strong and build your strategy with passion. This is FXPassion signing off.